So, if you're trying to make sense of the global economy for 2026, it can feel like you're staring into some really thick fog, right? We've got confusing signals, a ton of geopolitical risk, just a whole lot of uncertainty. So, in this explainer, we're going to try and cut through some of that fog and see if the latest analysis can give us a clearer picture of what's ahead. And right off the bat, we're hit with a huge source of that fog: geopolitics. As this report points out, a single event, like U.S. action in Venezuela, could send ripples across the entire global system. It adds this layer of risk that is just incredibly hard to predict. And honestly, that's just one piece of a very complicated puzzle. And it's not just the big global events. Even when you look at the core economic data, you get these really messy, conflicting signals. For instance, a recent U.S. government shutdown has made all the numbers tricky to read. You see payroll figures looking kind of soft, but at the very same time, the unemployment rate has actually gone down. Or how about this? Inflation looks like it's cooling off, but then you see the cost of essential stuff like memory chips is actually on the rise. It's a really contradictory picture. So, all of this brings us to the one central question we're trying to tackle here. With all this tension, all this confusing data, is it even possible for the global economy to keep growing? Well, here is the first big twist in our story. Because despite all those scary headlines and that thick fog of uncertainty, the answer so far has been a surprising yes. The global economy has actually shown this remarkable resilience. It's basically been, as the analysts say, muddling through way better than anyone really expected. And to put a number on that resilience, the final upgraded forecast for global GDP growth in 2025, it came in at 2.8%. Now that is a solid number, and it proves that the economy had a lot more underlying strength than many people were giving it credit for. So how on earth did it pull this off? Well, it really boiled down to three key things. First, and maybe most importantly, consumers just kept spending. Second, global trade actually grew pretty strongly, even with all the talk about tariffs. And third, that slow, gradual decline in inflation kept going, which eased some of the pressure on all of us, on households and businesses. But that strength didn't just come out of nowhere, right? So let's pull back the curtain and look at the powerful engines that are actually driving the global economy forward through all this fog. Now, here's a really crucial point to understand. This isn't some uniform boom where everyone is winning. It's what economists are now calling a K-shaped expansion. And it's a great visual. Just imagine the letter K. One arm is shooting upwards, while the other arm is heading down. In our economy today, the artificial intelligence sector is that arm shooting up, creating a massive boom for some, while other parts of the economy are kind of getting left behind. Okay, so here's how that first engine, the AI boom, actually works. It's a chain reaction. Check this out. Step one, AI-related stocks just surge, creating this huge wealth effect for anyone holding those stocks. Step two, those now wealthier, higher-income households go out and drive really strong consumer spending. And then step three, all that spending creates a massive surge in demand for AI-related electronics, which is fantastic news for exporters in places like Taiwan, Korea, and Southeast Asia. But AI isn't doing all the heavy lifting by itself. There's a second major engine chugging along, and that's good old-fashioned government spending. Fiscal support from governments all over the world is providing another really critical boost, keeping that economic momentum going. So, because these two engines, AI and government spending, affect different economies in very different ways, we're starting to see this really fascinating split on the global map. Not every country is in the same boat, which means they're not all following the same playbook. Just look at this slide. It shows that divergence in action. You can literally see the split. In one camp, you've got central banks in places like Australia, New Zealand, Sweden, and Japan, and they're all expected to raise interest rates. But then, on the complete other side, you have the UK, the Eurozone, the US, and a bunch of emerging markets, and they're either holding rates steady or are actually cutting them. We're seeing two totally different strategies for two very different economic realities. All right, let's do a quick flyover to see what this looks like on the ground. Over in Europe, we're seeing some early signs of recovery, but it's pretty fragile. It really depends on that government support we just talked about. In mainland China, the recovery has been, well, a bit underwhelming, and it looks like they're going to need more stimulus to get things moving. And then you have the United States, where growth is being propped up by the effects of the government reopening and some recent tax cuts. Okay, so we've looked at the risks, we've seen the surprising resilience, and we've uncovered these two different engines of growth. Now let's bring it all together and see what the actual forecast is for the year ahead. This is the moment we've been building up to. After you weigh all of these conflicting signals, these powerful trends, what's the bottom line for global growth in 2026? And here it is. The headline forecast for global GDP growth in 2026 is 2.7%. So, yeah, despite all that fog, all the uncertainty we started with, the outlook is for continued, pretty solid growth. And this is really important. This isn't just a static number. This 2.7% forecast is actually an upgrade from the previous expectation, which was 2.5%. This just reinforces that central theme we've been talking about. The global economy keeps outperforming the pessimistic expectations. So if we break that global number down, you can see where the new strength is coming from. A huge part of this upgrade is being driven by a much stronger forecast for the US, which is now expected to grow at 2.3%. Japan also saw a pretty notable upward revision. Now, the Eurozone and mainland China are holding steady, while the UK, well, it's the one major economy here to see a slight downward revision. So what does this all tell us? What do you really need to know? Well, first, that improved outlook for the US is really lifting the entire global forecast. Second, Japan's fiscal stimulus is also giving a significant boost. But, and this is a big but, we have to keep our eyes on the risks. And a potential US government shutdown is still a major one that could throw a real wrench in the works and create a lot of volatility. So to sum it all up, here's the big picture. Yes, the world is uncertain, no doubt about it. But new engines, specifically that AI boom and government spending, are powering a global economy that is surprisingly resilient. Now, the growth isn't the same for everyone, it's uneven, but it is there, and it's defying a lot of the pessimistic headlines. And all of this leaves us with one last, pretty fascinating question to think about. If a technology as disruptive and as concentrated as AI is now one of the main engines of the entire global economy, are we entering a fundamentally new era? Maybe one that's more dynamic, sure, but also maybe more volatile and more unequal than ever before? That's something we're all going to be watching very, very closely.